in the back. Let's just get some nice, soulful.
Jay, before we record, are we gonna go through take profit as well?
Yes, we'll do that. Thank you very much. We'll do that. Whatever you want to do, remember this is your day, and that is something that you asked for from yesterday. So for sure, we are gonna go through, TPs and where to best place your TPs. All right.
Thanks, man.
Yeah, for sure. Now it's a very, very good question, and it's something that definitely should, be a focus because what happens is, see, what you're going to start finding is you're going to be able to get into trades, okay, and the trade's going to be doing well, and the anxiety is going to be, oh, okay, so what do I do now? Should I close my trade now, Jay? I'm up $100, I'm up $200, oh my God, I'm up $400. What am I doing? That is a real problem in the trading journey, okay? It's a real problem on the trading journey, okay? So TPs is very important, so we're definitely gonna go over that. Right, so let's have a quick glimpse at these and tell you why even though I'm in the buy, I'm ultimately want to get in for the sell, all right? Okay, let's try and see why. So, this is our Euro USD, okay? Our Euro USD, as you can see here from September, started making some lower lows, lower highs, lower lows, lower highs, all right? So therefore, let me get rid of this. Let me try and make it a big screen. Only sometimes it messes up when I do that. All right. Okay, so this is our Euro USD, yeah? The Euro against the United States dollar. And as I spoke to you guys in the last, in the last session, and as you understand, I like to always simplify this and make it very clear that this could be the market for absolutely anything. Doesn't have to be the market for this thing they call the euro and the thing they call the US dollar. It could be the market for anything. And in any market, we have some basic rules that we've always lived by, that we want to buy cheap and sell expensive. Okay? Now, when we look at this market, I'm just putting in some lines, going all the way back to 2020, I'm putting in some lines. Okay? Like so. And I can go back further if I wanted to, but, I understand, I overstand, all right, that we are day traders. Okay? Maybe this is a better line. We are day traders, okay? And what happened 20 years ago isn't necessarily going to have an impact on what we do today. Isn't necessarily, all right? Because maybe it does. Maybe we're right at the top of a threshold and we do see an event happening in that market where we're going to turn around, etc. But have a look. I think it's clear to say that this market has been bearish. Lower lows, lower highs, lower lows, lower highs, lower lows. All right. Now we're into this lower high level. So straight away, my overall bias is I would love to be in a sell position from a much bigger picture. So in the back of my brain, that's what I'm thinking. In the back of my brain, let me get rid of this in fact. In the back of my brain, I'm thinking to myself, I'd like to sell this market somehow. Okay. I need to improve my sound. I have my sound setting a bit mad. It's a little bit distorted. So I'm going to see if I can sort it out. Yes, in the back of my brain, I'm interested in selling this market, but I can't just hit sell right now because this is me looking on the weekly time frame. I'm in space at the moment, looking down at Earth, okay, and I can see the landmass. That's not enough for me to be able to, I can't plot my landing from space. I can just see, the shapes of the countries, the oceans. I can't see my actual landing spot. I need to zoom in. All right. If I think I'm going to hit the mark, someone says, yeah, I mean, Jay, you're in space. I need you to jump out and land here, in London, here. I need to zoom in. All right. So when I zoom in down to my daily time frame, meaning every single candle is a day in time. Okay. I can see that the market was bearish from here. Look, brrr, making that lower low. And then the market made a retracement, brrr, came up here, making a lower high. If I wanted to, I can put some lines in here to guide my eye, all right, to understand, okay, that's what the market did. Came up here, put in a lower high. I might even start looking at some other little bits of maths Just doing some research. Okay, the market kind of made a retracement into 50% to the 618 of this impulse. Push pulled back in here. Okay, interesting. Still looking like that's bearish energy. Got into that 618 to that between 50% and 618 area, and then the market started to break structure. Have a look. The market came down here. Boom. Indicated breaking some structure. Where was that structure? The structure was here. Because if I was to draw another trend line, if I was to zoom in, my last trend line that I draw on this time frame would look like this. It would look like this because it would touch the last low before the highest point, which becomes a level of structure that the market smashed through, indicated what it wanted to do. Then it retraced back up into these levels. Just below 50% of the impulse, it looks like to me, and then continued coming down here. That would be our indication correction continuation. Even if we took that trade on a much bigger time frame, putting our stop above the last high, we would have seen profits. We've been in the blue as the market moved down here, breaking more structure, breaking more structure, breaking more structure, breaking more structure. Yeah, and now we've got down to this level over here. Have a look, where we've seen structure being taken, big wick below here. The question is does this market want to push back in here, making a bigger retracement? Okay, a bigger correction in its journey. Yeah, because maybe this here is just an impulse in the direction. Have a look like this. Look, trading within here, and maybe the market wants to push back up in here somewhere. Okay, into these levels to make a retracement before coming down some more. I don't know, because my crystal ball has run out of batteries. Okay, but what I do know is that I can read and react to what the market does. Okay, I do not have to be the all-seeing eye and have to predict, 6 months in the future of what's going to happen in the market. I don't need to. Okay, what I need to be able to do as a day trader is read and react to what the market is doing. Okay, with my overview, with my understanding, with my education of market structure, price action, etc., etc. Okay, so if I drop my time frame down to a 4 hour, let's go to a daily first and foremost, and let's zoom in. Let's see what's actually happening on a daily time frame. So we can see that this market, which is Euro USD, has been bearish, at least for the last week. Look, from up here, we've had red candles, red candles, red candles, red candles, red candles. Okay, meaning that the market's price has been falling for, 1, 2, 3, 4, 5, 6 days. All right, 6 days. Yeah, all right, all the way from last week. Okay, now we like to identify what our outside candles are. And this here red candle, have a look. If I rewind one day, was an outside bearish candle, meaning that it closed outside the range of the previous candle. Okay, so what does that mean? All right, what does that mean? Let me do this way. All right, that this candle's range was from this wick here to this wick here. Let me draw. I know there's a slight delay on the stream, so between this wick, between this wick and this wick was the previous trading range of yesterday. Markets traded within those prices. Yeah, so if you wanted to buy something more expensive or sell something more expensive than that range, it never happened. Or you wanted to buy cheaper than that range yesterday, it never happened. It traded within these two white lines, all right, the day before. But yesterday, that market closed outside of the range here, indicating potential momentum to the downside. Yeah, indicating potential momentum to the downside. Now, this is just one bit of confluence. This isn't the be all and end all. But what we understand is these markets hate inefficiencies. They don't like to see imbalances. And we can see in here from where the next candle is going to open, all right? Potentially the next candle opens where the last candle closes, but sometimes we do see it jump and gap up on the open. But either way, this gap between the previous wick and where the next candle is going to open, which we can't see now because I've rewound it, is an inefficiency that we understand the markets like to close. So even if this market wanted to come down, there's a possibility at some point in its journey, it may want to close this gap first before coming down some more. Let's click for the next candle. Now the next candle is going to be today of what it's done so far. Okay, and have a look. What happened? Huh? It's like the market phoned me and told me what it was going to do before it did it. It's come up into here at some point in its journey to today already, okay, and come up here and close that imbalance. So therefore, hence the reason why I said ultimately Euro, USD, I'd like to be in for the sell. I actually don't believe that the market needs to go bullish anymore, okay? And right as we speak, we've actually seen that market, Euro, USD, I want to zoom all the way down because you might be able to get into the trade with me, okay? And we've seen a reaction and we've seen a manipulation pattern, and it might be time that we could get in for the sell, which is overall what I wanted to be in the market for. All right. US 30 is still going to space. That's fine because it hasn't quite done what I thought it needs to do yet. So let me close this. I don't know where all my other candles are. What's going on? Hello. Can I have some candles, please? There you go. All right. So you can see here, and going back to understanding, can you see this dotted yellow line? This was the open. If I go over here, sorry, I think I've got the wrong time frame on here. Let's just go to London time zones. All right. So you can see over here at about 12, which is about somewhere around here. So I've drawn this line a bit funny. Let's go back to my daily candle real quickly. Sorry, let me check something. All right. Let me check something. Daily. I'll tell you what I'm checking in a minute. Yeah, it's just I just drew it badly. Okay. All right. So what I was saying is this: the candle. You see this candle here? It didn't open at the close of the previous candle. It actually gapped up a little bit and opened here. Okay, how do I know that? Because red candles open in the top left-hand corner or the top of the body and close in the bottom right-hand corner of the body. And bullish candles, green candles, open, you might as well just say bottom left to top right. So it didn't open at this bottom corner. It kind of opened a bit up here. Now that makes sense now when we zoom all the way down. I was on my 1 minute time frame. So there's a potential opportunity now, maybe. We'll see what the markets do. Okay, because look, now you can see that's that yellow line where it says open. This yellow line here that says open. We can see approximately, see here, around about here, was the open of the day here. And the markets opened, and that imbalance that was above, that was drawn, which is this gray box, straight away in early hours of the morning, 12 o'clock, it came and closed that imbalance. All right. Now, remember what I said to you. Ideally, I'd like to be in here for a sell. The market came all the way back down here in Asian session whilst we were sleeping. And then this morning, we had a reaction to some liquidity being taken below here, which is how I was able to tell you I'm in a trade. Yeah, and how I am currently, I don't know, $900 up. All right. Small. All right. Because we had a reaction to the liquidity being taken below Asian session. But it pushed back up into an area here that I identified as some imbalance, and the previous, this is the daily open. The same level here, can you see it says open, this daily open, which also happens to be what I call winky dink, an area I identified with some imbalance. Can you see here? Can you see here this little imbalance in here? And now we're having a reaction in here, which is what I said to you. Ultimately, I would prefer to be in for the sell with our EU and our GU. And even our US 30, once it's done what it's done, I'm buying to sell in all of them. All right. So I've got to be conscious of that. I can't lose in any of them because I'm totally risk-free. And I'm willing to sacrifice my buy profits. I really would like to get in for the sell. All right. Even though US 30 don't care about that, it's going to the moon, which I'm happy about. Okay. Whoops, give me a second. Which I'm happy about. I'm just moving, I'm just squeezing up my because I'm not managing, because when I'm on this call, it's difficult for me to manage the trades how I want. All right. So I'm just squeezing some bits and pieces up, trying to secure some monies. When it gets to 4 figures, I'll secure the 4 figure. All right. So we're watching this market here, and the market is ultimately already closed this imbalance. So this gray box has already been closed. Okay. And we've had a reaction to liquidity. We know we only take a trade after liquidity has been taken. We can see a manipulation W that's in here. I'm not going to focus on it too much, but trust me, it's in here and it tapped in here. Can you see this wick tapped in lovely, gave me a beautiful entry at about what time is that? About 8 o'clock. All right. Or maybe it's even a bit sooner than that, but about 8 o'clock. And the market since then has pushed up into that level of imbalance that I'm concerned about. The question is are we going to have a reaction to where the market's opened up here and get bearish, as my overall bias I think may happen, okay, even though the markets are not obeying that at the moment, all right? Or are we going to continue pushing up to take liquidity first from the opposite side of the spectrum, which is this Asian session high is a target. Hence the reason why you can see out of all of my liquidity lines, which are these red lines, all right, this one is a brighter red line because it's a potential target, all right? Now, this leads us into Darren's question. Okay, nicely. I'm going to hide this indicator because it can sometimes, make things look a little bit... You want to see everything? Okay. Shut the door, please. We're having little man who shut it properly, please. He's woken up a bit hot today, so he's not going to school. So now he's in the office trading with daddy, yeah? Trading with daddy. Say good morning.
Good morning.
Say it nice and loud.
Good morning.
Good morning.
Okay, he's not feeling too well. Okay, so we're gonna sit here with daddy and trade. Okay. So as you can see here, you can lie down over there. You can lie down there. Let daddy shut the door. Okay. So as I was saying, so we can see the liquidity was taken from over here, and we've seen a reaction. Now, I'm in this for the buy because I trade what I see, and what I saw this morning was liquidity taken, manipulation patterns happening, and breaker structures happening, and I got in for the trade. Okay. Now, Darren asked yesterday, I wasn't able to get into it around TPs. Now, when you're trying to pick your TPs, you need to understand there's a few factors that come into play. The first thing is what are you trying to achieve? Now, what do I mean by that? I mean, if you're trading your prop firm account and, you only have to make 10K and you're up 1,500, okay? And your TP is or you're up 2K, or you're up 1,500 or whatever it is, and your TP is at 1,800, a little bit further on. Now, first and foremost, you understand that I've given you guys a poster playbook that when you get to a 1 to 3, anyway, you should be taking off, you should be rolling off 50% of your position. It's called taking partials. Okay, I've already made that quite clear that that's what should be happening. Why? Because we never know what these markets are going to go do. Okay, we never know what these markets are going to go and do. So you should be taking partials. You see, right here, I would like to, even though I'm in here for the buy, I think we might be turning around now for the sell. Okay, I've seen a manipulation M pattern appear right at previous open, right in this imbalance. I've seen the market tap into it twice. Now, what I'm waiting for to get involved in this is, should I take the money right now? Tell you what I'm going to do. I'm going to take the money right now. I'm going to close my profit positions. I'm going to start with everyone together. Yeah, we're going to start together so that we can all get in a trade together. All right, if structure bricks. Okay, so this isn't an area. Yes, liquidity has been taken above these highs, but we've traded back into the middle of Asian session. All right. Now, I do not know what this market's going to do right now. I'm talking to you about my hunch, understanding the markets, that maybe we might be turning around right now. I know how markets like previous opens. I've seen this market tap into an imbalance, and I'm watching it. However, from a structural perspective, I'm only on the 1 minute time frame, and therefore structure is like, here's some minor structure in here, some minor structure in here, here's some structure. This is the structure as you can see on a 1 minute time frame. Yeah, now we can see a little bit of structure in here as part of our manipulation M. Okay, and the market has indicated aggressively through all of these bits of structure, and it has corrected up into these levels. But as it stands right now, it hasn't continued. So therefore, this market is still, have a look, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. There's nothing telling me right now, sell. Yes, I have my hunch about what may or may not be going on around here, but there's no confirmation. So what is that like? Let me give you an analogy, because you know I'm the analogy guy. That is like you go into Bristol Road and you just close your eyes. You just get to the roadside, just close your eyes, and you're just listening for cars. Yeah? And then when you hear it go quiet, you think to yourself, yes, I'm the anointed one. And now you just step out into the dual carriageway. Now, you might be right, because you couldn't hear any cars coming. But personally, if you was my child, I'd say to you, open your eyes, please, and look to see if there's any cars coming. Get some more confirmations. Because for all you know, you've got 10 Teslas and Ubers coming towards you, making no sound, ready to lick you down. So I've got a hunch. I'm looking here. I'm thinking to myself that, you know, overall, even looking at the daily time frame, etc., that, you know, I'd like to get in here for the sell. However, I traded what I can see, which was getting in here for the buy after liquidity was taken. And now watching this and saying to you guys, I am in this trade completely risk-free. Must stop somewhere down here. And though I don't want to give any money back, I'm not having to hit 4 figures yet. Yeah. Is that I'm also going to trade what I see. And what I need a confirmation that this market is actually ready to rock and roll bearish, yeah, before I just jump in and say, yeah, I'm ready to sell. Now, let me tell you something. If you guys did that more often, and remember what I said, it was asking yourself, why? Why should I buy? Why should I sell? Why should I do this thing? If you can ask yourself why and have a good answer, every time you take a trade, you will already be in a great position. You see, right here, we've seen this manipulation M here, this market push back up into this kind of area here. I don't know. 1 second. Baby, you have to turn that down for me, please, babes. Huh? You know where the volume is, please. Don't be silly. Turn it down or you can turn it off. It's down to you. All right. All of a sudden, my son can't find the volume button on his iPad. Bearing in mind, they're iPad connoisseurs. Yeah, it's quite interesting. So I'm waiting for confirmation. Okay, because as I've just shown you here, even if we take into consideration minor structure in here, we've had no correction and continuation to tell us anything. And at the moment, I'm in a pretty position because I am ultimately buying into a potential sell. Meaning that even if I'm wrong, I'm still going to be prosperous because I'm going to be part of the buy. I'm going to be part of this move. All right. I'm going to be part of that push up into this energy here. Now I'm watching it. There is no red folder news that's going to pop up out of the blue. Yeah, here, pass it, please. 1 second, guys. Yeah, that's the volume. I turned it down for you. Yeah. Well, Daddy should get your headphones. That would be better, wouldn't it? All right. Anyway, so sorry. So we can see here. All right. So we can see that ultimately I'm in that position. So what have we learned? What am I trying to show you? What am I teaching you guys? All right. First and foremost, I'm saying this is that I've got a bias for this, which is a bearish bias, but I've traded what I see. That should be the first, thing you should take from this session so far, is that we have to, if as day traders, we have to trade what we see. We have to trade what's actually going on. We can't trade based upon, oh yeah, some guy online said that, GBP USD is going to be bearish. Okay, where it may be bearish, it may be bearish for a little while. Yeah, it may be bearish for the whole day, but when you're about to get into the trade, is it bearish? That's the question. And if it's not, then you can't just hit the button for a sell. You've either got to wait patiently for that thing to happen, yeah, or you've got to do your own thing. All right, because I can say that the market's going to be bearish today, even though I'm in for a buy, yeah, and even if I said to me that I'm buying and you're buying at the same time, I might make money and you might not make money because you don't know how to manage your trade. Okay. Sorry, this guy's distracting me. Yeah. You okay now? Okay. All right. So we're watching this. We're watching this EU. All right. Position. All right. Now, going back to what Darren said. When we're taking our trades, we need to understand what it is we're trying to achieve. If you was in the market and you're trying to pass your challenge and you're 1,500 up, but your structural level where you think the market's going to go is to 18 and 1,900. Look, first and foremost, like I said, you should have already taken partials. And secondly, you are in a position whereby you can say, you know what are you happy with for the day? Let's imagine that you had a 100K account, you have to make 10K and you're up 1,000, you're up $1,500. If I was you, personally, I'd at least make sure that for that day, I don't finish my day without taking $1,000 for the day. Personally, I'll be like, look, I'm up 1,500. My TP is at 1,800 or 1,900 or even 2K. But I am not leaving these charts after being $1,500 up in profits with less than $1,000. That's how I'd be looking at things. I'll be like, listen, I'm telling you, I am not going to leave with less than a certain amount of dough. Yeah. So therefore, you can move your stop loss up and say, I've at least secured my 1,000 in. Now, ultimately, when we take trades, if you want to be very purist, is that you're taking trades and you're trading from structure to structure. If you have got the direction correct, and if you believe that the markets are going to continue to move in a certain direction. For example, this morning, I don't believe that these markets are going to start going here and touching structure and structure and structure. I don't. I'm in an advanced trade, taking the trade against the overall trend, ultimately to get in for the sell. Hence the reason why you keep hearing me like pausing and looking over my shoulder, because I'm trying to work out at what point am I going to tap out and take the money, because I ultimately want to get in it for the opposite direction, which between me and you could be any minute now, as I just glimpse over my shoulder. And take at least some money. So at least take out, $600-700 out of the market instead of taking nothing. Because ultimately I got into this trade saying that I want to be in for sell. I said I'm just buying, I'm taking an advanced trade buying in to the sell. And what I'm looking at is not only Euro USD, it is these following trades. Have a look. I want to split my screen into 3 so we can look at them all at the same time. Okay. If I do this, and I move this over, it is Euro USD over here, it is GBP USD, and what I would say to you guys is you should never take Euro USD and GU. You don't need to take both of them, because what you're doing is ultimately you are you got all your eggs in one basket. Okay, you don't need to take trades with all your eggs in one basket. Doesn't make sense. Okay, you can take trades based upon. Okay, 1 second. All right, so it's EU, GU, and over here US 30. You can take trade. Yeah, you don't have to put all your eggs in one basket. If anything, you're better off hedging. Like in regards to if one thing happens, you can be in a position whereby if one thing you're going up in one market and down in the other market because they've got a negative correlation. But when you're in a market when they've got a same correlation, they both do the same thing. That means you're either going to win on both of them or you're going to lose on both of them. So you're kind of doubling your risk, if you kind of not understand my point. All right. But these are the markets I'm looking at now. Like I said to you, all of these here. Okay, so in our US, our GU over here, there was an opportunity buying this market up in here. All right, our US 30, the opportunity is from down here for this entire buy up here. And for our EU, the opportunity was here because I traded what I see. But ultimately, I want to be in for the sell for all of those markets. Okay, for every single one of them, I want to be. How do we know that as well? Have a look over here. I've already gone through my pairs and identified what I think these markets may be doing. Look, EU outside bearish candle, GU outside bearish candle, US 30 outside bearish candle. So ultimately, I'd like to be in there for the sell, especially when I've seen in certain markets, for example, this one over here, which was our EU, it's already kind of closed the imbalance above. I already said that. Asian session, look, the market opened here, this yellow line over here about 12 o'clock, wherever that may be, about here. I've already seen the market come up here and close the imbalance. So there's that wick that we talk about to close an imbalance. It's already occurred. Look, if I go to my daily time frame, have a look. Daily, refresh. Look, if I zoom into here, if I even hide all of these drawings, that wick has already come up here and closed up this imbalance. So I'm thinking to myself, like, there may be no reason that this market wants to, doesn't need to go up anymore. It's gone up. Now it's all about making a nice big red outside candle, hopefully. Okay. That's what that's the, in the back of my brain of why I kind of want to be in for a sell. Yeah. However, I traded what I saw and was able to take an opportunity for a buy after liquidity was taken. But in the back of my brain, I want to sell. And that is an advanced trading strategy that ultimately what I could have done is simply waited for my opportunity to get in for the sell. Now that opportunity, in my opinion, is in this Euro USD space, either this imbalance that we've currently tapped in that happens to be right at this at the open, or maybe this market wants to be extra cheeky and go all the way back up here to take Asian session highs, which is very possible. It's not impossible. It's possible this market decides to go up in here, take some liquidity, and maybe from New York it starts to become bearish. Yeah, maybe. I don't know. Like I said to you, my crystal ball has run out of batteries. Yeah, if anybody's got one that's actively working, please, I need a lot of renumbers. Yeah, and you can run me those and we'll go 50-50. All right. But ultimately, that's how I'm looking at it. Same thing with the GU, which is over here. Look, we can look at it on a smaller time frame. There was an opportunity to take a trade from up here, but ultimately, I believe that this market, we look at it on a daily time frame. If I'm not going to do that, I'm going to focus on US 30 on the big screen. All right, I'm going to focus on US 30 on the big screen. So I'm going to delete everything. I'm going to zoom out, and I'm going to mark this chart up with you, with that together. Okay, and I'm going to tell you my thoughts on it. And I want you to either understand what I'm saying or say, I don't really get what you're saying, and stop me in my tracks and ask me what's going on. Why have I done X or Y? All right. That's what I want to happen. So let me just do something over here. Let me do something because I'm not looking at my charts. Let me do something. There you go. All right. So US 30. All right, US 30. Now we've already identified on a daily time frame. It's been ever so slight outside red candle. Okay, but let's look at what the market's been doing. Okay, this market has been bullish. Like I said, we don't have to go back to the start of time, but we can see here just within the candles that are on my screen, going all the way back to 2021. Okay, that we can see these markets have been bullish. Okay, they've been bullish, and we understand why US 30 is, ultimately always bullish, because it's designed to be bullish. It's the top 30 companies in America. These top 30 companies in America are not going into work and working out how to make less money. They're going into work and asking and having conversations about how they're going to make more money, take more market share, dominate more. Yeah, get more profit. That's what's happening every single morning. All right, every single Monday morning, those are the conversations that are being had. So we understand why this market's going up and up and up. Hence the reason why you hear people say, just buy the S&P 500, man. It's a better strategy than the day. Because the S&P 500 is, top 500 companies. They're supposed to be going up. Unless there's some real problems happening in the world over, even if there's retracements, even if there's recessions and things contract, overall, the top 500 companies in the world or in the country, in America, yeah, is supposed to be getting bigger and better. So that's why, as a long-term investment, they tell you to buy S&P 500. You don't hear people say, well, listen, if you want to have a long-term investment, what you should try and do is, use leverage and sell the S&P 500. They don't say that. Long-term, they say it's going to go up because that's how it's designed to go up. Same thing with the US 30. The top 30 companies are supposed to be getting better and better, bigger and better on a daily basis. Even if we have some sort of catastrophic event, some recession, some COVID, something. Afterwards, unless they just get deleted off the face of the earth, and if that's the case, we've got some bigger problems than trading the markets. They're supposed to come back with a vengeance and continue to grow. And if that company, whatever your favorite company is, starts slipping down the list, and they're number 30, and then they stop performing really well, and they go to number 31, well, they just get out, they get thrown out of the gang, out of the crew. They say, listen, bro, sorry, my bad, but you're not cutting it, bro. You go sit on the bench and somebody else comes off the bench, number 31 comes off the bench and sits at the number 30th position. So it's always going to be the top 30 companies. So therefore, this market going up and up and up and up and up and up and up is no surprise. It's nice to be able to always get into this trade for the buy, but as day traders, we understand that the market moves in waves, up, down, up, down, up, down. If I was a position trader trying to take a trade for today and check on it in 3 months' time, well, then maybe my bias would be, let me buy the US 30. That's what my bias would be. I'm telling you now for free. I'd be like, if I was a position trader, I'm going to take a trade today and just go to sleep for the next, whatever it is. The bias would be, this is a bullish market. But if I'm in the day trader, bearing in mind every single one of these candles are a day in time, I have to be more sensitive to potential price movements because I understand that markets move in waves. Impulse, retracement, impulse, retracement, impulse, retracement. So where I get in is going to depend on whether I'm going to be profitable or not. I already know if I want to be a guru and you want to be a guru around the Christmas table, just say to somebody, yeah, I think you should just buy US 30. In the next 2-3 years, you'd make some money. If you want to sound like a guru, just say that to them. Because that's how the market's designed. It's designed to go up. But that's not going to help them now. If they say, yeah, what should I buy? I need to buy something right now. Pearl asked me before about XRP, and I said, listen, I think that all of these cryptos are going to go to the moon. I think they're going to be bullish. I think Bitcoin could potentially get to $1 million. I think all these type of things. But right now, would I be trying to hit the button right now, today, at the top of this? Remember when the hysteria was earlier in the week or last week it was, when XRP did the madness? I'd be like, no, I wouldn't hit the button right now. And since that day, the markets just fell. It doesn't mean that overall they're not going to recover and keep pushing up bullishly. But as a day trader, if you're trying to get in and out of the markets, then you have to be more sensitive. If you're just investing in a market, you're just going to put your money and leave it there. That's different. Find a company that does good things in the world, that has, real utility that people desire. Maybe if you want to put some extra sauce, look at the world and see where you believe that the world may require some kind of service, some kind of product because of things that are happening in the world, and identify a company that you think is going to do very well. For example, we are in the age of technology. Do we agree? Do we agree that we're in an age of technology?
Yep.
Okay? I agree. I think we're in a technological era. I think there's AI. I think there's all these type of things happening. If somebody said, say that again, my bro.
Okay.
Jay, I'm not gonna lie to you. Jay, talk to me. Jesus, I accidentally unmuted himself. All right, we're in the age of technology. So if somebody said to me, yeah, Jay, I was gonna I want to invest. I'm not going to be telling them to go and invest in high street shops. There's a shop that opened on a high street, and I'm going to go and invest in this high street shop. Personally, I'm not, because I can't remember a time, or let me not say I can't remember a time, but more times out of 10, people are buying their stuff online. People don't want to get out of their bed and go and walk around in the cold and that. I know that most people here, or a lot of people who's going to be on this call right now, have probably done their Christmas shopping, haven't left the house. Yeah, they've done it online. And we understand that right now we're looking at all these technological things. We're looking at robots. We're looking at electric cars. We're looking at AI. We're like, right, this is the age of technology. So surely, if we can identify companies that are doing major things to push technology forward, or there is a demand for certain types of technology to allow their businesses to continue flourishing. For example, I played something yesterday which was about the quantum chip. Did somebody stay in the session and watch that information that we played about the quantum chip that's developed by Google, I believe, if I remember correctly? Yeah, I don't know if it's Google or Nvidia, I can't remember. But the bottom line is that if I'm out here and I'm in, developing technology, developing chipsets that are going to allow faster processing, okay? They said that whatever the chip was, they developed a chip that process information so fast that previously it would have taken something like, I don't know, 5 centillion years to do this computation. Yeah, or some mad amount of time. This one did it in 15 minutes. Yeah. Now, that type of technological company, if that isn't a massive company already, which I believe it's Google, I'm going to have to check in a minute. But imagine it's a smaller company. It's, Jason Inc. coming straight out of Stratford. Or straight out of, where you live there, Jay? Luton, yeah? Straight out of Luton, yeah? That's developed this amazing chip. And his company isn't quite, massive yet. And he spoke to me, Jay said, Jay, I'm not going to lie to you, Jay. JP, I've come across this technology. I've been developing it in my bedroom with my boys, and it's going to speed up the processing of AI. Yeah? It's going to be doing great stuff. I'm telling you, we do. Our only competitors are Google and this person and that person, and we're ready to go right now. We've got some investment. Blah, blah. I'll be like, whoa, that sounds like that might be a 10. Even if this guy's even slightly correct in what he can do, there's a demand. It's in the right area. Hence the reason why I say, investments or hedge funds or VCs, there's certain times that there are certain types of industries that are more sexy than others. Right now, if I'm starting a business and my business has these type of words in it: AI, blockchain, fintech, prop tech, these type of words, agriculture at the moment, yeah, because we know there's always this concern about the world's food supplies and resources. These are sexy industries. They're like, yeah, let me just throw some money at this industry. Why not? Because they're looking at it like, you remember, they're also doing exactly what we do. Let me explain to you how it works. When you hear about these huge companies, or these companies getting huge amounts of investment, this company's got 100 million investment, and Google has invested this one, this hedge fund invested. They're doing the same thing that we're doing. They're managing their risk. They're looking at it like, we've got enough money here to invest in 100 companies at 10 million a pop. One of them's going to be the next Google. They're taking calculated risk. They're like, listen, no problem. We can give you 10 million. We can give you £1 billion. We've got enough money to invest in 100 companies at £1 billion. One of them companies are going to be a unicorn, are going to go crazy and give us a 10x or 100x or whatever it may be on our money. And that's going to give us all the money back from all the losses of the other companies that were promising us the world and did nothing. That one company, that one Google, that one Tesla, that one Nvidia, that one company is going to give us back our dough. Sounds similar to me. Sounds similar to something that we do. Sounds similar to when we trade and how we manage our risk. Sounds extremely similar. We're basically saying, look, cool, we can fail our way to success if we manage our risk well. Okay? So, with that said, coming back to these charts, US 30, all right? So the US 30 for me, like I said to you, is bearish. Sorry, is bullish in a bigger picture. Let's have a look on the bigger picture here. Is a bullish market making higher highs and higher lows and higher highs and higher lows. And on this daily time frame, if I put some dots in for someone who can't see it straight away, nothing is telling me to, on a long term, to sell this market. Because it's only been making higher highs and higher lows. So why would I now think, just because I've turned up on my computer, that in the bigger picture the market's going to start making lower lows and lower highs? I cannot take that trade as a bigger trade, saying that we're going to start breaking this daily swing low and this daily. How can I say that? I've got no information telling me that. But on a smaller picture, I can make these conclusions because I have structure. See, on a smaller time frame, this market has been making if I hide this indicator, which is just my sessions indicator for anybody watching at home, it's nothing more than a sessions indicator. All right, I don't use indicators and all types of stuff on my charts personally. If you do, good for you, but I don't. All right, but I do want to know where the sessions are. Asian, New York, London. All right. Now on a smaller time frame, look, I'm all the way down in my hour time frame. That market, see where we've had our dots. This was a yellow dot here. But on a smaller time frame, we can see lower lows, lower highs, lower lows, lower. This, in fact, this has been trending down beautifully. Look at the range of how this is trading down. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Very beautifully within our range. Yeah, very, very beautifully within our range. So say, for example, Darren, going back to your question, let's imagine that I got into this trade here and I could see how beautifully this market was trading within this little white range. And I was able to get into a sell from up here. Got a lovely entry in here. When the market got down to here, there's going to be a few alarm bells ringing in my head. One is we're in the bottom of the beautiful range that it's been trading within for the last however long. Two, we've tapped into structure. A previous battlefield over here is a point of interest for me. Oh, this is a point of interest over here for me. Yes, we can see a structural swing low over here, but this is a point of interest. It's a previous battlefield where the market couldn't break. Came up here, couldn't break it. And then had to break it with strength and speed with this big green candle here. And look how the market came. We took our trade down here. Darren's in here rolling in the money, but he's concerned where should he get out? Well, look for your points of interest. Look for structure. Because on a smaller time frame than this hour time frame, you see this little red candle here? I know this gives us a little swing low on this impulse. I can see it with my eye. Yeah, watch. If I drop down to my, like I say 15 minutes, let's just say 5 minutes over here. And I look back historically, because that's how you find structure. You can't look into the future for structure. You have to look forward. Well, this level here, if I was to draw some lines in here, look, if I was to draw some lines in here of this market doing something, this becomes a level. Just like these were all levels of structure. All of these are checkpoints on your journey. All right. Now, on what you want to do is you want to align these smaller checkpoints with their larger time frame. Because on a 15-minute time frame, you might not see all of those 5-minute levels. Yeah, they're just not visible. Yeah. Now I can clearly see here, maybe it's my eyes, that if I was to pick out some of these little structures from in here, there's some of them that I would discount and there's some of them that I would keep. The ones that I would keep would probably be these ones here. Have a look. If I change the color, the ones that I would keep would be this one. Let's change the color. Would be this one here. And possibly this level in here. All right. As well as this level down here. I like to say to you guys, look at it, maybe go cross-eyed. Look at it. If I was to take all the drawings off it and go cross-eyed, there are some points that stand out. They're your major data points. All right. There's some little ones in here, little noise in here, but really this is the one that stands out. So if I was in that trade, if I got past this little one here, which in my opinion has a lot of liquidity below it, as this market was going sideways in here. So I'm expecting it to get past here and take the liquidity. But this point here would be a bit of a structural level. Yeah, and you can either choose to stay in there, depending on, like I said to you, what you're trying to achieve. If you're looking at your profits and you're only up to, $20 and your aim, like, well, you might have to be like, look, I haven't achieved enough for me to start stopping myself out of this trade. I took this trade on the basis for it to be a minimum of 1 to 3. Because remember, when you take a trade, you have to at least be able to see 1 to 3 in it. If you can't see 1 to 3 in it, it's like you're not even positioning yourself to win. All right. But when you're in the trade now and you're moving, you're looking at the price action and you decide, you know what, I'm in good profits. Listen, you're not going to, that's your decision to make, basically. Okay. That's your decision to make. But structure and points of interest is going to be the first level. And have a look at this little structural. This structure is also lining up with a point of interest, which is that gray level here. So I'm getting 2 bits of confluence at this point here. At this little target here, this little price point of about 44,046, I'm getting 2 points of confluence of that's a potential area point of interest. And have a look at the market. Brrr, from here came down to that point here, which is this point here, this gray line. And look, had a reaction from there, pushing the market all the way back in here. Now, if I was in the trade, yes, I got in the trade up here, and maybe I'd still be in this trade. But the question is if I was taking a prop firm challenge for argument's sake, and I was up here $1,200 at this point here, because it's all well us turning around now and saying, oh yeah, look, it turned around and kept going. But do I want my profits to go all the way back down to $200 here when I was $1,200 up and my target for the day is $1,000, or my target overall is only $10,000? Because the same way this market came up here and started coming down here, maybe some news came and did that and stopped you out when you was $1,200 up. So you have to look at it like, what are you trying to achieve on a daily basis? Now, how's a better way for me to explain that to you? Let me ask you this. You know how much money you go to work for every single day. So if I turn around and say to you, Darren, even though you work for X amount of money every single day, I'm going to put $2,000 on the table, or £2,000 on the table. If I come back in 10 minutes time and the $2,000 are still there, £2,000 are still there, then we could try to, work on for the rest of the day to see if we can make more than £2,000. But if you take the £2,000 and put it in your pocket, you can keep it. Now, Darren's going to be like, bro, I know what I work for every single day, and it's not £2,000 a day. I'm just guessing. Yeah, maybe Darren does. He makes $2,000 a day. I don't know, from his job. I don't know. Yeah, but maybe he doesn't. So he's gonna be like, rough. But come back later on and see if I can make $2,000, more than £2,000 for the day, when I only make £400 a day. Nah, bro. By the time he comes back in 15 minutes, that $2,000 is gonna be tucked away like it was never there. It's gonna be deep in your pockets. Because you're grateful for the fact of understanding, bro, I'm £2,000 up today. I only normally make £400 a day. You're not going to be like, let me leave the £2,000 here and see whether I'm going to make £4,000 today when you normally only make £400 a day. You're going to work that maths in your head very, very quickly. So in the trading, let's do the same thing. Let's turn around and say, here, look, boom, I only risked $100. I only risked $100 up here. My trade's at a 1 to 12 down here. So yes, the market could retrace and go and make me a 1 to 20, but I'm at a 1 to 12. I mean, what more do I want? I mean, is this a normal day? Is this a day that it's just normal that I'm normally just catch 1 to 12s? Or should I be grateful of what I've been able to achieve from taking this great trade for 1 to 12 or 1 to 10 and make sure that I at least take some of those blessings, i.e., I say, you know what, Jay, I'm not losing more than $1,000. I'm not losing more than $1,000, and I put my stop loss here. Yeah, and the market comes here, and I'm 1,200, and I'm coming back up here. I'm 1,100, and then I'm 1,150, and then I'm coming back down here. Oh, I'm 1,300 or 1,250, and then it comes back here and stops me out for 1,000. When you get stopped out for your 1,000, let me tell you something. You are not going to be vexed. You're not going to be upset like, oh, it stopped me out for $1,000, man. I only risked $100 and now it stopped me for $1,000. You're not going to be vexed. You're not even going to be vexed when later on you see in the day that the market went brrr down here. Because it doesn't matter. That money's in your pocket. You've moved on. You've already phoned the missus, been like, yo, babes, we're going out tonight. Yeah, put those shoes on that I like. So you have to know when to take the money. And this is a very good example of understanding structure, understanding points of interest, and more importantly, understanding what are you trying to achieve every single day. If you've achieved what you've trying to achieve for the day, but you don't know whether you should take your profit or not, well, it's like, bro, think about the £400 a day or £200 a day or whatever people make every single day. Think about that number and that example that your boss said, here, I'm leaving this $2,000 on the table. If I come back in 15 minutes, we can try and get more than $2,000, or you can just put that away in your pocket for the day. You're not going to be stuttering. You're going to be like, bro, what? It's my monthly wage right there. Boom, I'm slapping it in my pocket. Forget about trying to make more money. You're going to be grateful that you was able to make $2,000 today. Yeah, and that's how you have to be in the markets. You have to be grateful and trade. Now, there are some traders on a smaller time frame that simply trade from one high to another high. That's fine. But if you're if you're too small, that distance is going to be too small. It's going to be like your spread's going to eat it up. All different things are going to eat up the distance. So if you got into a trade on a 1 minute time frame, for example, and you're looking for structure, zoom out. Look for a more significant structure to say, you know what, blah, blah, blah. Like for example, if I was to get into a trade right now, I'm just going to use an example, nothing to do with actual, these markets, all right? Nothing to do with actually taking this trade, just for an example, all right? So I'm going to put on this indicator here, which is showing me my session levels. Now let's imagine that, let's imagine that within this London session here, that the market comes all the way up here and takes liquidity up here, like this. Lovely. It's taking liquidity. For a start, it's at the top of the range. The range I'm talking about is this, and this is this. For a start, we're at the top of the range. Okay? And then it takes this liquidity from the top of New York session high. Liquidity's been taken. And it makes a manipulation M with displacement. Yeah? And then the market comes and it taps back in here. And then I see a lovely reaction. I get into this trade, maybe even on a smaller time frame in a 1 minute, and get in this trade over here on a smaller time frame maybe. And then I get in and I'm starting to take this trade down. I would be looking at this saying, okay, this market is trading in the direction it's been trading in, bearish. We've taken liquidity from above. I believe it's going to be a bearish day anyway because of my outside candle energy. I'm at least going to take this trade down to previous session low where there's liquidity and potential structure. So we can see structure over here for argument's sake. Let's make this blue. Let's make this blue. Let's make this, let's turn it up a bit. All right. That there's potential structure below here. Okay. And we can see that there's session low of London is here. Now, I wouldn't put my stop loss all the way down here below the session low. I don't need to. I put it before the session low, which in my opinion would be London lows here. Would be me getting in this trade here. And throughout the day, when I hit this number here, I'll be like, I'm happy, yo. We've come from up here, taking this liquidity from New York high, a previous New York high here. I saw what I needed to see. I got in, I managed my risk, and this market came all the way down here, took London session lows. I actually believe that this market's going to do this. I'm not going to lie to you. I believe it's going to go through this level of structure. Why? Because the market is bearish and it's making lower lows and lower highs. It's coming down here. But I also know that when markets take liquidity and go into key levels, they like to make a retracement first. And I would not want to sit in this trade as it comes all the way back up into here for whatever reason, before later on tonight or maybe even tomorrow decided to do this. Why should I? Why should I sit in this trade after I've taken a fantastic trade and I'm down here $2,000 up, watch it come all the way back up here to for me being $300 up, $200 up? Why should I do that? When the aim of the game is me taking money at the markets. The aim of the game isn't me being a guru and saying, oh yes, look, I was able to predict what was going to happen over the next 2 days. That's not the aim of the game. You don't get points for that. Yeah? You get points for taking money out of the game and closing your trades and being happy. So therefore, Darren, I'm taking this trade from after liquidity's been taken, after seeing what I need to see, after seeing the displacement, after managing my risk and getting in the trade and saying, okay, yep, I was able to even find a smaller entry here. I make a decision whether I want to put my stop over the swing high, which is a safer place, or over the last high, which is a more aggressive entry. And then when that trade starts moving in my direction, I'm targeting liquidity structure. So this might be my end target here. But in between that, look, have a look. If I wanted to, some milestones would be structure. That would be some milestones. Let me make these slightly smaller. That would be some milestones on the journey, yeah, of that, as that market came down. This here would be a milestone.
Yeah,
This
I
here would
see
be a milestone because this is structural level. This is a structural level. But ultimately, I'm believing that the market, after taking liquidity there, is chasing liquidity below the London lows, but more important, below the structure, which would be here, which is very, very possible. I stop myself out here. This is why I don't stop myself out of trades. What I would do at this point here, personally, it depends again of what you've achieved, how much money you're up, is I would move my stop loss like this. Pow. Right here. Right up at the arse of where somebody else would stop themselves. I'd move my stop to here. And if I look back and look away and then look back and I got stopped out, okay, so be it. Cool. I got stopped out for a 1 to 10, 1 to 9.8. I don't care. I'm like, okay, cool. But if for whatever reason the market doesn't immediately kick back on me, you see this, and instead of just doing this, it might do this first. It might say, wow, we are got so much momentum and so much going on that we are just going. We're going to do our retracement later. Yeah, we're going to do this little bit here later. Well, then I've now moved my 1 to 10 all the way down here to 1 to 13. And how I'd be trading that manually is every time I see a structural high, a lower high form, I'd be moving my stop manually. I'll be saying,
managing your trades that
gosh,
way.
I'm killing this trade. Say again?
So you're managing your trades that way.
That's how I manage my trades. And I'll tell you why. Because I'm in front of my computer all the time. My lifestyle is my job. I am in an office in front of a screen. So therefore, I've got the ability to do so. But someone else may not. Someone else may say, listen, I've taken this trade. It's killing it, Jay, but I've got to go to work. So by all means, place your stop loss right here. And when that trade gets here, boom, it's going to put that money in your pocket, and you're going to look back at your computer, your phone, when after you get off the train or after your lunchtime, and you're going to have taken a 1 to 9 trade, and you're going to be happy. You're going to be happy, even though this trade went all the way down like this, and then by the time you looked at it, it's all the way back up in here. You're going to be like, oh, I could have taken the trade down here. Yeah, you could have, but then again, you could have not put your TP in here, and now the market's all the way back up here, and you're thinking to yourself, rah. I was up $3,000 and now I'm only up $150 or I'm in the red. All right. So it's different because of the life. That's why when you hear guys talk about, yeah, you do this and you do that. How can I tell you how to trade and when to trade and how aggressively you should trade when I'm not you? I can tell you the parameters of, guys, if you're in front of your computer, you can manage your trade whereby every time you see, have a look here, this market, so you've hit your target now and you're over the moon. Every time you see structure, this market make a lower high, you can move your stop loss to above the lower high, taking into consideration any imbalance that may be above that lower high. And then you can do that and keep securing in more money. You're over the moon. Everything now is a bonus. Keep securing more, because you know what would happen? There's going to come to some point after this big push where this market might not give you an opportunity for an indication, correction, continuation. It might just do this. You might get down to here and it might just do this. Some big green candle comes from nowhere and appears like that. And then you're like, oh my days, I could have taken $3,000 down here, but now this big green candle appeared from nowhere and now I'm back at my $1,000 and I feel like an idiot. So that's why I would manually manage my trades, because right now, from all the way up this blue line up here, everything below here is just profits. Profit is bonus, it's extra. It's money I wasn't expecting. For whatever reason, the market's just running in that direction. Yeah. Maybe it's news, maybe it's manipulation, maybe it's end of the year, who knows? But I'm just taking it as like, wow, that's like your boss put the $2,000 down on the table, and actually he said, I'm going to be back in 15 minutes to pick up that $2,000. But he comes back in 5 minutes and goes, you know what there, Jay? You know what there, Darren? I'm feeling extra generous. And just starts taking out 50s. 50. Starts giving you another 50. Starts giving you another 50. Starts giving you another. Let me tell you something. Every 50 puts on the table. The same time he's putting it on the table, I'm putting it in my pocket, yes? I'm be like, okay, yep, I'll have that one. Yep, I'll have that one. Yep. Just in case he changes his mind. Because if he gets down to it and he starts walking down the hallway and goes, wait a minute, I swear I remember that time Darren was being rude to me in the to HR, or he sent that cheeky email. He might just change his mind, and a big green candle here appears from nowhere, and he comes back and goes, you know what, Darren? In fact, I thought about it. Can you just run me back that money? Is that money still on the table? Run it back to me. So you don't want that to happen. You're taking every level of this structure as this market moves down as bonus money. And when this here, a big green candle appears from nowhere, because we know it has to. We know these markets at some point are going to retrace you're going to be laughing your head off. A trade that you thought was going to be a 1 to 10 at best was a 1 to 20, a 1 to 15. You're over the moon, you're laughing. And let me tell you something, the other hack. You ready for the hack? And this is for a lot of people that's on this call right now. This is for Jason, this is for Jivan, this is for everybody, Marcus, this is for everybody. After you've taken that trade for 1 to 15 or 1 to 10, you are going to turn off your trading view, shut your MT5, and you're going to enjoy the fact that you had a good trading day. Sounds simple, right? But let me tell you what normally happens. You start thinking to yourself that you are the trading god. You start thinking to yourself that you have completely clocked trading. You just took a 1 to 50. You just turned $100 or $200 or $100 or $200 into $3,000 or $100 or 50, and you think to yourself, like you can walk on water. You start thinking to yourself, damn, I made $1,500, $3,000 today. I might as well just go for the 20 grand. Now I'm on fire. And I'm telling you, that energy there, more times out of 10, will have you giving back money back to the markets. All of a sudden, now you take a loss. Okay, I've only made 1,200 today. Then you take another loss. Okay, I'm down to $1,000. Now take another loss at 800. Then you start thinking to yourself, oh, I remember being 1,500 up only an hour and a half ago. So now you're chasing that 1,500. Before you know it, you're only $200 in profit after being $1,500 in profit, an hour earlier. I am talking to you from experience with a H. Yeah, I'm not talking to you from theory of life. I'm talking to you from the practical of life. You just taking a good trade. Listen, go and get a drink, go to the kitchen, relax, go for a walk. Feel happy that you can end today saying this is a profitable day, that you can check that off on your journaling, that you took a really good profitable trade today and you're very, very happy with what you've achieved. Yeah, because you're thinking to yourself, if I can take another profitable day tomorrow, then that really gives me some momentum. Do not be out here on some I'm now Terminator 2 and I can now take on the entire universe. Just me. You're John Wick. You're not John Wick. You're going to run into that bar, and as soon as 10 men run at you, try to punch you up, you're going to get punched up. You're not John Wick. Yeah? So take your trade, take your win, put it under your belt, and mark it as a profitable day. Because let me tell you something. Slow and steady wins the race. Because if you made 1,500 today, which was an anomaly, it was a 1 to 15 trade. Cool. Tomorrow you're not going to maybe do a 1 to 15 again. But let's imagine that tomorrow you do a 1 to 5. Well, now you're up 2K. Now you're 20% towards your target of getting 10K in profits. And then maybe the day after you take a little L. Cool. Maybe you go back down again to 1,500. Maybe the next day you take another winning trade, another great trade, a 1 to 8 or 1 to 10 trade. And then you're making your progress towards your glory. That's how this trading thing works. Yeah? It doesn't work whereby you just think to yourself, I'm going to do it today. And why are you going to do it today? Let me tell you why. Because the little voice on your shoulder, which is greed, okay, is saying to you that you need the money now. You want to get paid out by the end of this week. So that Saturday, you can go to take the whole family Bond Street and give them the best Christmas that they've ever had because you just got a 20K payout. I know. The voice is on your shoulder. The voice is saying to you, nah, don't stop now, bro. Keep going, keep going. Don't listen to that voice. That voice is, and the best way for me to explain it is like this. You hit a bullseye in darts, okay? You're not going to hit the next dart you throw is going to be another bullseye. In fact, every time you throw the darts after that point, the probability of you getting another bullseye is going down considerably. It's not going up because you threw one bullseye. Man, like, oh, he threw one bullseye. He's likely to throw another bullseye again. No. There's so much board that you can hit, yeah, on a dartboard table. It's unlikely you're going to hit the little red dot in the middle again. And if you do happen to hit it again, it's even less likely again that you're going to hit it again on the third time. So if you hit that one bullseye, you're better off just dropping the darts and saying, guys, I told you I'm the best, and leave him. Because now nobody can't argue with you. You hit a bullseye on your first try. Leave, bro. Leave like you could do it all day long, knowing that the probability of you doing it again is very, very low. Don't be like, I can do it again, you know, let's double or quits. No, bro, you're mugging yourself, bruv. Because the likelihood is you're not going to do it again. This is the same principle with our trading, guys. Because your hedge funds and your big organizations are not out here trying to get you 1 to 15 on a daily basis. They're not. Because it's not sustainable. What's sustainable is taking a trade and you saying, I took a 1 to 2 today, Dre. I did everything. I saw the liquidity being taken, boom, boom, and I got it. And it's a lovely 1 to 2, 1 to 3 trade. That's something you can sustain. So therefore, if you do manage to catch a 1 to 10, if your manager does manage to come in here and drop a 2 grand on your bro, take that monies and understand it's not going to happen regularly. All right. So that's my unique little summary understanding. My take on TPs, where you should be taking your profits. Take your profits at obviously milestones, at structure, but obviously understand what you are trying to achieve. If you are trading your own private account and you've taken that trade and you're aiming for making, you know, $100 for the day and you're £7 up, I'm not saying at that point in time you should be like, okay, we've hit structure, let me just take my money, because it's like, bro, you was aiming for, you know, this trade to go to £20 or £50, whatever it may be. Like, you can't be scared of letting your trade breathe. All right, because your trade is going to move backwards and forwards. It is going to move into negative and then move into profits. It is going to, because that's how the markets move in waves. Yeah, so there's a point when you take a trade whereby you're in hot water and you have to bite the bullet of you potentially losing. Yeah, you're not risk free yet. You know, nothing like that. You just biting the bullet of hopefully this goes in my direction. That's why we manage our risk. Okay, there is a point when we take in the trade and we can take an L. And then you're going to get to a point whereby you've made it risk free now. If you make it risk free too early, because you haven't let your trade breathe, all that's going to happen is going to stop you out for nothing and then go in the direction that you thought it was going to go. And you're going to be sitting there thinking to yourself, oh my days, look at it, went to the moon. Why did I move? I know I was talking to Jigs about it, and he's like, bro, I keep moving my stop a little bit too early. Like, I keep stopping myself out early. I said, that is a little bit of fear. And what you normally find in trading, guys, is people here, people will hold a position. Like, you'll get into a position, yeah, you think the market's going to go down like this. Your stop is up here, okay? Your entry was here. All right. People will get into a trade and let this trade go back all the way here. Look, negative. Imagine you wanted to risk maximum $500. They will let this trade get to $499 before even, obviously their stop loss is at 500, but they're sitting there biting their nails, hoping, and yep, 499, and let it go negative all of this distance. But as soon as they get into profits here for £5, they're thinking about closing the trade. They think to themselves, oh my gosh, I'm in the profit. Should I close? So let me get this right. This trade is supposed to run all the way down here for 2 grand or for a grand, and you've got into £5 profits, and you now want to move your stop. But when we was all the way going back in here, you was praying to the pip gods for it to turn around. So why don't you pray, now you're in profits, to this to go to where it's supposed to go to? But you find people will let their position go into negative, just for as soon as they see blue, to move their stop too early and stop themselves out for no profits. Makes zero sense. All right. How I was actually taught to trade was there is no break even. All right. And I'm not saying that's how I trade now, because I don't. All right. Because I understand the value of having a really good trade or whatever it may be. Yeah. However, I was taught, baby, shut my door, shut daddy's door for me, please. Yeah. I was taught that you either win or lose. When you get in a trade, you're either hitting TP or you're hitting stop loss. You're not touching it. That's because they wanted to teach you how to let that trade breathe. No, thank you, darling. Thank you. Yeah, they wanted to teach you how to let your trade breathe. Let your trade play. Look at these markets. At every point, these markets are going up, down, up, down, up, down, up, down. Every time they was going against you, you had, you were scared about your, closing your position. You never make any profits. You have to be able to let your trades breathe. Any more questions about anything, guys? Got a few of you on here. Any other questions about anything else? about anything else in regards to trading, in regards to the markets, in regards to the MT5, in regards to brokers, in regards to anything, in regards to prop firms, any other questiones. Good. If there is no more questiones, I'm going to tell everybody on the live, thank you for watching, like and subscribe and share and all that good stuff. All right, let me